This past week has been quite a volatile week with a lot of stocks breaking out into a large amount of momentum. How long can we continue to see this? Well, judging by hims and hers, not very long, but in this video we are going to be looking at 6 of your favourite stocks ranging from Palantir, Supermicro, HIMS, SOFI, Celsius and NVDA. So without wasting any time, because I know your time is precious, let's get straight on to Palantir. So Palantir has been up massively recently. However, in this last week we have seen this stock absolutely tank it, losing all of its momentum due to the fact that its CEO basically came out, Alex Karp, saying that he's selling $1 billion US dollars worth of Palantir stock. Now you could take this either way. You could see it as, oh, that's actually not that much for how much he owns, he's probably pricing in a lot of growth, or you could see it as, holy shit, that's $1 billion of Palantir stock that's going to get sold. I need to get out now before the stock falls. And I think that we have seen the latter of this with a lot of selling pressure in this last week. When a stock with a PE of when it was around 627 odd starts to have selling pressure, you can expect it to just continue to drop. However, with Palantir, it has only dropped 14%, which is quite impressive. You would think that the panic would set in a bit higher and more people would sell off. So for me, that is actually a bullish indicator. Believe it or not, a 14% sell off is actually not that bad in my mind. Don't get me wrong though, I definitely have Palantir to be overvalued on my system currently, despite me saying that this 14% sell-off is actually not that bad, with a bearish intrinsic value for this year's growth being set at $7 and a bullish intrinsic value being set at $14. This is due for review though, as this hasn't been done in about a month now, so I do need to re-review this and conduct a discounted free cash flow analysis. But in my opinion, Palantir is definitely overvalued, even with a discounted free cash flow analysis. I just don't see a suitable position in there for intrinsic growth, but that doesn't mean to say there isn't going to be growth in the future. So in terms of growth in the future, what can we expect? Well, on a daily chart, we are still well above all of the trend lines, which is exactly what you would expect with Palantir, as it's just been growing exponentially for the last what seems to be forever now. It feels like 9 months maybe, and we are in a long position with this opening up into our most recent long position only here on the 22nd of January. And despite this massive sell-off in the past week, we are still massively in a long position with no sign of it closing anytime soon. But we could see this reverse into a short position as early as late next week, depending on how quick the market can react and if there is just enough support for Palantir. We can see here on the RSI that we are now at a 50-point mark, which is actually, in my opinion, quite good. I think this sell-off has actually been quite a good thing for Palantir, as it's just brought it back down to reality in a weird way. I think it did need something like this, as it was just ridiculously going up and up and up for weeks and weeks, and that's just not that sustainable. And if you're buying it at the top, then you are literally exit liquidity. I think that Palantir just really needed a reason for a sell-off, and that news coming out just made it a valid reason to sell off essentially, and that's why we've seen that pressure. But again, it wasn't that much selling pressure, which is again very bullish in my opinion. On a 15-minute chart here, we can see that we are obviously now in a short position on the MACD indicator, and on the RSI we are barely just in fairly bought territories. So what can we expect to see next week? Well, I expect that we might see a bit of early buying pressure, but long term I think that we might see a lot of selling pressure later on in the week, purely just because sellers are trying to now take profit before obviously more negative press comes out around Palantir and before those $1 billion US are ejected from Palantir. So now we are going to be looking at Supermicro Computer. This stock is a stock in which I said was going to break out about a month ago, and it has done exactly what I said, with this now being at $56, and I have the intrinsic value for Supermicro to be set on a bullish indicator at $169 and a bearish of 89, with a mode being set at 129, with the discounted free cash flow analysis coming in at 453, says pounds, but that is meant to be dollars. So we are looking to be still undervalued on Supermicro at the moment intrinsically. But that doesn't mean to say that it's going to go all the way up, but I do think there is room for more growth within this stock, with it having a lot of pressure around Wednesday, selling pressure that is. The stock has just stabilized towards the tail end of this week now. I think that next week we might see a bit more sideways momentum, but I think long term, and when I say long term, I'm saying within the next month, we could see, it could go either way, to be honest, with this stock, because it is a bit of a hit and miss stock, but I think it should continue to go up, with this now being above all of the trend lines, and we are now seeming to fall into a fairly bought territory on the RSI. If we do look on the MACD indicator, of course, we are well into a long position here, and we can just expect this to continue. Looking on this 15-minute chart here, we can see where the selling pressure occurred a few days ago on Wednesday. My stop loss was triggered around here, as my system updates my stop losses for me, and this was exactly where I would want it to be. So I took a nice profit, and I will be looking to potentially get into this stock again next week, depending on what my system says for breakout potential. But at the moment on the 15-minute chart, we are in a short position on the MACD indicator. We are just above oversold on the RSI. And looking on the 15-minute chart at the trend lines, we can see that we are below all of them, bar the 200-day moving average at the moment. So I think it's fair to say that we are going to see a bit of sideways action next week for Supermicro, and we could actually see a lot of selling pressure, as a lot of people are going to start to take profit. But I think long-term, intrinsically, this stock is going to do absolutely fine. As I said, they are still massively undervalued, as their valuation got absolutely rinsed back when their earnings were known to be fabricated, but they have since rectified that and fired the people at fault. So now we are looking at HIMS. HIMS is a stock in which I have just done a video on, where I said long term this stock is going to do absolutely fine, but short term I think it's fairly overvalued, with my valuation I think coming in at $66. We'll check that in a minute, but it has fallen down massively at the tail end of this week, similar to Supermicro, but much worse in my opinion. This is basically due to people starting to realize, well, why am I putting so much money into HIMS? They don't actually have that much of a dominance on this market, as recently today, I think the news came out that the FDA said that Ozipec is no longer in shortage. This coming from companies like Novo Nordisk. So it really put questions on why people are actually putting so much money into HIMS. Intrinsically, let's just check where I have put HIMS. So I have put HIMS stock, when I can find it, I have put HIMS stock at a bearish intrinsic value of $34 and a bullish intrinsic value at 66, which is exactly what I just said. And the IV mode for this is at $50, with the discounted free cash flow for the 9 years growth being set at $315. And if you divide this by 3 to get a 3-year growth, we can see that it is set at $105. So in my mind, HIMS was fairly to nearly overvalued earlier on this week, when it was hitting highs of around 72. But obviously we have now brought this straight back down, and it is somewhat back to being under to fairly valued again. It's not a stock in which I can recommend buying into at this point, purely just because of this volatility and almost uncertainty within its space at the moment. Obviously, this company is growing ridiculously quick for what sort of company it is, you know, for a telecoms health company. It's not even telecoms either. Sorry, I'm talking about engineering stuff. For a telehealth company, it's growing exponentially quick, with its liquidity ratio and retention rate looking absolutely phenomenal. But on the RSI now, we are oversold, and on the MACD indicator we can see that we are definitely in a short position, and this just looks to be getting larger and larger. On a 15-minute chart, on the moving averages, we are below all of the moving averages now, which is exactly what you would expect after such a large sell-off. On the day chart now, we are fairly bought into. We are above all of the moving averages, and on the MACD we are still in a long position, but I'm not entirely sure how long we can expect this to stay open for. Hims & Hers does obviously have their earnings report coming out on the 24th of February, which is Monday, so do put that in your calendar if you do hold Hims & Hers stock, as it will be quite detrimental. But I think no matter what they say, I think the stock might actually come down. It's hard to say. This could be a really good earnings report, and the stock will absolutely fly up again, as people are seeing this as a bit of a discount. But if it's not really, really good, I feel as if we're going to see a lot of selling pressure, especially after the FDA's reports today saying Ozepec is no longer in shortage. So it will be interesting to see exactly what happens with HIMS next week, especially with this earnings report. My personal opinion is, if you do hold this stock, put a stop loss in around 10 to 15% below where the current price is. I'm speaking from experience here with a stock which we will get onto, Celsius. Be careful with your stop losses, because I lost out on a 50% gain on Celsius the other day, which was not fun. Okay, so now SOFI, this stock just continues to baffle me on how it isn't actually going up. I have this stock's intrinsic value to be way above where it currently is. I have SOFI's intrinsic value to be set on a bearish indication at $90 and a bullish indication at 118 based off of next year's growth. And of course, I haven't got a discounted free cash flow analysis because their free cash flow isn't consistently positive. But in my opinion, Symbotics is a stock in which just needs to go up. I think intrinsically it has everything behind it to go up. It's got a CEO with quite a large presence on X, which is good for brand image. It's just basically revolutionizing banks as we know it. It's the new kid in town and it's smashing it, which for a financial institution is just really good to see. But we have obviously seen this long position opening up here in August and riding all the way up to around January. But now we're just seeing a lot of sideways action. It's important to say sideways action isn't a bad thing. You might see this and think, this needs to go up. Sideways action is where all the sellers get out. It's where if the stock was to suddenly shoot up, all the people that were going to sell once it shot up are now out. The people that are here for the long run will be holding on to the stock during this sideways action and waiting for the next breakout, which intrinsically should happen. I've said this before, whenever a stock is undervalued, it tends to have a breakout after some positive news like Celsius, in which we will get onto, or HIMS. I mean, all of these stocks I've done analysis on before and I've said they're undervalued, and all of them have broken out. And I still think that SOFI is currently still undervalued, so I do expect it to still break out. So if we do a technical chart analysis here, we can see that we are fairly bought into. On the MACD indicator, we are in a short position, which is a shame. It's not been a particularly great week for SOFI as it climbed and died, much like every other stock this week, to be perfectly honest. And if we look at the simple moving averages, we can see that we are above all of them, but the 50-day, the 10-day and the 7-day. And if we look at the 15-minute chart here, we can see that we are below all of the moving averages, which is quite heartbreaking, to be honest. And we are definitely in a short position. Furthermore, we can see that we are barely just fairly bought at the moment, actually on the brink of being oversold. So in my opinion, if you're holding SOFI stock, continue to hold. I think this stock is going to do well over the next year for sure, but right now it's looking to be a choppy time, with it just continuing to fall day after day. It's interesting. It is an interesting stock. It should be going up, but it's not. But it's similar to Celsius, in which we will get onto now. So Celsius is a stock in which I also did a review on about a month ago, saying it should break out, and it just continued to go down for a bit until obviously this last couple of days where it did break out. I think I made a video around I want to say here, where I said it's undervalued, it should break out, and I put the intrinsic value to be around $32 where it is now, and that is exactly where it has broken out to. I actually missed out on this opportunity of a breakout through no fault of my own, really. I've only got myself to blame. Basically, I put a stop loss in, and it got triggered at 10%, which is a bit silly. I should have adjusted it due to the fact that earnings were coming out, because that is obviously a very turbulent time. But I fell asleep, to be honest. I had work the next day. I fell asleep and forgot to change it, and my stop loss was triggered, and then the stock jumped up 50% last night. So I was not a happy bunny when I woke up. Looking at the MACD, we are still actually in a short position. However, this looks to be as if it is going to swap over within the next couple of days. However, I despite not being in Celsius right now, I'm not buying in. Personally, I think that this stock is now fairly valued, whereas it's right down here at the bottom. We can see that I have the bearish indication to be set at, that's the bullish show, to be set at $32 and the bearish at 18. If you're wondering, if you're actually looking deeply into this chart, I've got these all mixed up somehow and I do need to fix it. But on the discounted free cash flow, we can see 9 years worth of growth is set at $63 and 3 years is set at only 21. So it looks to be overvalued currently for the free cash flow in which they are bringing in. So for that reason alone, intrinsically, I don't see there being any more growth, but that doesn't mean to say momentum will carry through for this stock, as if we look on the moving averages, we are above all of them, bar the 200-day moving average on the daily chart. If we look on the 15-minute chart here, we can see that we are above all of them, which is very bullish, but we are now seeing a lot of sideways action. Typically, once you see a stock jump up, if it continues to rise up a bit more, I would say that's obviously more of a bullish indicator than to say if it starts going sideways. But sideways action is definitely not bad, and to see it fall off here and to climb back up is very bullish. It shows that people are trusting in this stock to continue to go up as they're buying the so-called dip of the height of the current height, of course, which is again very bullish. And it won't shock you to hear that it is on a long position on the MACD indicator. So for that reason, I'm going to say hold Celsius if you're holding it. Put your stop losses in, but don't be an idiot like me and forget to adjust them. Basically, I don't know where this stock is going to go. It's too early to tell. I don't want to say it's going to continue to go up because intrinsically it shouldn't. But momentum could definitely carry through, especially after seeing this sideways action. But I think what is more likely is it will sell off down to around the $27 mark. Okay, so keeping this one as brief as possible, we've got NVDA. I'm a bit worried this video is going to go on forever. This does feel like a long one. So NVDA has had a pretty choppy week as well, with it being in a short position on the 15-minute chart and oversold on the on the RSI indicator, which suggests that early next week we could potentially see a bit of buying pressure. And on the moving averages, we are now below all of them on a 15-minute chart, which is not a good look at all for NVIDIA. And if we go on a daily chart and I zoom out, we can see that we are above all of the indicators on a daily chart, but it's still looking to be very choppy. It's a similar pattern to SOFI with a lot of sideways action, but it's hard to say where this stock will go as it's such a massive stock, obviously. But we are in a long position on the MACD indicator on a day chart, but with today's massive sell-off, we can expect this to, well, not last very long. For the intrinsic value of NVIDIA, I have this currently set at a high of 246, which is obviously massively above where we are around the 130 mark, and the bearish to be set at 129, which is roughly around where we are, which just shows that NVIDIA is being treated quite poorly as well at the moment, and the intrinsic value mode is set at 187. So I think there is potential for a breakout in NVIDIA as well, probably not so much as the stocks in which I've spoken about before, because it's such a big stock already, and a big breakout will just cause big selling pressure, but there is potential for intrinsic growth, of course. But with that being said, I think I'm going to end this video here. This has been quite a long video. I hope you like my background. I'm definitely sat there right now, but yeah, basically, if you have enjoyed this video, please do leave a like and subscribe. It would be greatly appreciated. If you want some more market insights and future breakout stocks, give this channel a subscribe. Follow my X in the description, where I basically go over what stocks I think are going to break out. And I will see you for the next video.